Good morning, everybody. Welcome to our live webcast series on business disruption. And today we're going to be talking about, we're going to have a focus on the NDIS industry sector. My name's Chantelle Robards, and I'm a business advisor that's specialising in supporting businesses within the NDIS market here at the Business Centre. For those of you who don't know the Business Centre, we're a not-for-profit based in Newcastle in New South Wales. We have a 35-year history with supporting small businesses locally and in the disability sector across the state. Just a little bit of housekeeping. We apologise we can't caption this video live, but we are committed to ensuring that that's done in the next couple of days, and we'll let you know by email when that's been done. We might also discuss some events and some other information where there's some links and further information that we'd like to get to you. We'll be emailing you after the session today, and we'll also pop those links in the description underneath the recording so that you can find those nice and easily. You can ask any questions today live in the chat box on the YouTube feed here, and we'll try and get to as many of those as we can. I've read through though the information that our fabulous guest presenter today is going to try and share with you, and there's a fair bit of information there. If we don't get to all of your questions within the time that we've got allocated to this recording, we will endeavour to get answers to you following the recording. Now, like most industries in the country, the NDIS sector has been hit really hard by the COVID-19 pandemic. We've got, as a face-to-face industry, our people with disabilities are very nervous about contracting the virus from their support people. And of course, as employers, very worried about the risk that's presented to your employees. And our sole traders equally as concerned about picking up the virus and then taking it home to their own families. So that's led to a big reduction in appointments and therefore significant cash flow issues for business. So today, on a stunning autumn day in Newcastle, I'm delighted to welcome Barrett Campbell, who's the owner of Balance 123 Accounting and Advisory, to take us through some of these financial challenges that small business in particular are facing within the NDIS sector. And we're going to try and demystify some of the government stimulus that's available for businesses affected by the COVID-19 disruption. Barrett has over 15 years of experience as an accountant. He founded Balance 123 back in 2018. The business specialises in providing virtual CFO services as well as other services like business advisory, accounting, tax planning, financial compliance. And Barrett also happens to be our virtual CFO here at the Business Centre. So welcome to Barrett.
Thank you.
Barrett, how are you, I suppose, and how is Balance 123 dealing with the impact of the coronavirus?
Yeah, look, it's a very good question. I think everyone is first and foremost struggling with the disruption to the home unit. I think a lot of people have gone from going to work, kids going to school, to kids being homeschooled. Fortunately, we've got a bit of relief from the homeschooling for a couple of weeks, but it's still really, really challenging. Trying to work in that environment, where you're looking after the kids, but you're also looking after your clients. So, we're still doing really well, I guess, in the face of this compared to a lot of businesses. But we're also working extremely hard because of not only the disruption, but we've got a lot of information that's being pushed into the marketplace. The ATO is trying to catch up with some of this because it's administering a lot of these programs. So, look, the main thing we're trying to get across to people at the moment is to sort of have some control. So, the four things we're really focusing on, both internally at our business and we're advocating our clients to do, is to communicate really effectively, manage your cash, manage the change, and then the last one, which is a little bit odd, but we'll get to, is consistency. So, I think, for most parts, communication is the number one thing at the moment that we need to be doing extremely well. So we've gone out of a face-to-face environment now to mostly an electronic environment. That's probably the main thing.
Yeah.
And then we've got uncertainty for employers with their employees, for businesses with their clients, and that also flows up the supply chain, businesses with their own supply chain. So given it is trying times, Steve Waite, we've done a few of these at the Business Centre, and Steve Waite's chat with Peter Chapman was probably the most telling in that, and he had a really good point that any business can really inject into what they're doing, and that is speak to people, whether that's your employees or your spouse, as you want to be spoken to. Take a little bit of time to probably inject some empathy into what you're doing, rather than sort of letting the emotion get the best of you. So I think that's number one, is just communicate really clearly on how you can help your customers, what you're going to do. Just make sure that it's clear, and that's probably my number one thing at the moment. Communicate. Cash management is the big one from a financial standpoint. Cash provides a real level of agility and flexibility in the face of disruption. It allows you, by having a little war chest, really allows you to sort of maybe take advantage of some opportunity, or to at least give yourself a little bit of security. So it's another big one is, there is some incentives to spend money in terms of depreciation. We're not really going to talk about that a lot today because I think the main thing at the moment is probably trying to just handle your cash position rather than look to be engaging in buying more assets. So the next, change management, which is almost a whole science these days. There's some really large bodies of work that some smart people have put together about managing change, managing your culture through change. So a lot of businesses have gone from working closely, seeing each other every day, like we have here, to working from home a lot. So trying to, I guess, keep your culture where it needs to be, or changing the way we're communicating, touching base regularly, doing things very differently. It needs to be a big focus, not only with for some of these providers, like you're saying, typically very used to providing face-to-face services, very hands-on in what they do, very passionate about what they do. Converting that into a Zoom webinar or like a telehealth is a big challenge. And we've had people say, look, it's so much work, it's a lot of talking, it's a lot of instruction.
It's coaching models.
It's a lot. It is, it is, because you can't physically correct someone's posture, or you can't physically alter what they're doing. You've got to articulate another way. So that can be mentally draining. I think a lot of people are feeling the end of every day is the end of a week, just in the effort that's gone into driving those appointments and still having really meaningful outcomes. So change management is really important. And then lastly is consistency. So it's really funny in this sort of disrupted environment to talk about consistency, but to implement any of those first three things, we really need to be doing it often and over and over and over again. There's no sort of magic pill at the moment to deal with the disruption. If you're talking about cash management, it's a constant exercise that you've got to do. And a lot of people might have been fortunate that historically they've never had to manage their cash daily or manage it weekly or fortnightly. That's now changed. So it's about consistency. There's no sort of one-off, I can do a forecast for my cash and then that's done and dusted. Now I'm good. For some businesses, it might be the case that now they've got a clear pathway. They know if they head down, they're going to be fine. But you're probably going to have to do it over and over and over again. So
Barrett, if people want to learn how to do cash forecasting,
look, there's a ton of great software that really helps. But a lot of what it is line by line, customer by customer, for a lot of these businesses at the moment. If you're in real strife, you're really looking at bill by bill, when is it due, individual phone calls, yes, I know this is due in 2 days' time. Is there any chance I can get that deferred for a week or 2 weeks? It can be that hands-on if it's very serious. So yes, there's some fancy stuff you can do, but it can be as simple as going through what you've got, looking at, okay, when do I earn my income? When do I get paid? When do I receive my money? And then what do I need to pay and when? And going through on a spreadsheet, quite simply looking at a week or a day or a month, depending on how at risk you are. So, there's some really practical ways to do it without needing to overcomplicate it. It's just simply looking at this, how much cash I've got now, when is it in, when is it out, and trying to manage that, and picking up the phone, communicating, saying, look, can you pay earlier? Hey, can I pay later?
Yep.
And trying to massage that.
Yeah, placing down some debt perhaps that might be sitting there outside.
Yeah, exactly. Look, if you've got a debtor problem, again, it's a sensitive environment in that, you don't want to come across as burning your customers either. Being mindful of longevity in your business. You don't necessarily want to upset the apple cart, but you do need to probably have those conversations, and that's where we're sort of talking about communication, is speak to those debtors the way you would like to be spoken to for the people you owe money to, right?
Which
so
in
take
our industry
that.
could be plan managers.
Exactly.
Could be self-managers.
Yeah.
Could even be the NDIA provider payments.
Yes. So it's exactly, there is some multiple layers here, and ultimately, you're really dealing in relationships. In business, it's all relationships. Yes, there might be a tangible thing you have, a product, a service that you're doing, but it's ultimately a relationship between you and someone else's business and someone in their business, regardless of how large. So that little bit of empathy and clear communication is certainly going to help in managing your cash position. By sweet talking or convincing or sob-storying, whatever it might be, it can be, if it's genuine, it can sometimes be a lot more effective than concocting a story or an alternate sort of reality, I guess. So.
Okay. Should we move on? I'm just going to check what we said we'd cover, because we've gone from pillar to post already. All right, so we sort of thought we might talk about how overwhelmed people were feeling with all of the stimulus coming in different sort of pieces, and what we can do to help people understand what's available and what they might apply for and what the implications for their business might be. Yeah,
so I mean, as part of all of this disruption, we've now got the stimulus packages, which the three really big ones that are talking points at the moment that businesses are probably hurting about is the JobKeeper scheme is number one, right? It's the most recent one. It's also quite a large scheme. So for employers with significant size groups of employees, it's A, a significant amount of money, but B, it's got a significant level of complexity. So what doesn't happen with that complexity is it doesn't reduce with how small you are, which can be really difficult for a lot of, I guess, the providers in this sector. Is they're probably not as well resourced as a business with 100 staff. They range from sole traders through. So it can be really challenging to understand everything that's going on at the moment. So what we've done is we've broken it down to sort of, basically the 10 steps of how this is going to fall out.
Okay.
We're dropping a fair bit of the detail out. Because it would be a 40-minute discussion on just the turnover test. It can be a 40-minute discussion just on eligibility or employees or super. So there's that much complexity in it that what we're really trying to get people to do is to work with their accountant, and we're going to try and put the brakes on a bit of the emotion by explaining the journey that what it's going to look like as best we know, so that we can give you some instruction on what you can look at doing today that's productive and working towards it, without sort of having to digest it all right now.
Yeah, because it's very practical.
Yeah, I mean, even for accountants, we're digesting as fast as we can, and we are still struggling with the detail.
And you're still receiving clarification on some of that detail, I understand.
Yeah, that's right. Yeah. There's still bits and pieces that are coming out, and most of the real boffins in this space are saying this piece of legislation doesn't match this rules, which doesn't match this explanatory statement, which doesn't match what the ATO said on their website. So there is some inconsistencies that people have flagged and that they're advocating through the appropriate channels to get clarity on. Right. So we can only really go with what we've got, which is what we're going to do. And the main message here is a little bit of patience, because we've been given a grace period, importantly, to the end of this month to make these payments.
Okay.
So there's no rush to go out and do it today or have done it yesterday. We do have a little bit of a grace period. The biggest pressure point for that grace period is going to be employers who feel a real responsibility to pass this money on to their employees right now, right? So that their urgency is actually driven by the empathy of the employee's situation. So that being said, we'll go through with how it works. Great. And it's still possible to make those payments, and then we'll tidy up the reporting, or their accountant's going to tidy up the reporting by the end of the month to make sure everything falls into place.
Excellent.
So
all right.
that's the plan.
So let's sink our teeth into it then. We've got the current stimulus packages. So would you like to outline what we've got?
Yeah, so we've got the main one's the JobKeeper scheme, obviously. There's also the pay-as-you-go withholding rebate that businesses who were eligible employers, can apply. So it's a really low level of work in that one. It's really just a case of keeping your usual lodgements up to date. The ATO will process it in the background. It'll reduce your liabilities, and it's going to provide a cash flow benefit really over about 6 months. So it's not going to be any sort of upfront windfall for a lot of businesses. It's really just going to be a reduction of that outflow over 6 months. So, and then the New South Wales have a grant for the COVID-19 affected businesses up to 10,000. That application's now live as well. So
we'll pop that link in the description.
Yes. So that links. So we'll get into that. That one's quite good, but you need to be very heavily affected. I think it's a 75% that you need to demonstrate turnover loss. So it's
great for restaurants and clubs and pubs who've shut their doors.
Yes, yeah. So they've got a list of industries as well that they've highlighted they expect to be affected. Sure. But for example, a hotel might be on that list, and I haven't gone through it in all the detail or recited in the detail, but its suppliers are going to be likely affected as well.
Yep, sure.
Right. So anyone who specialises giving services to that industry,
of course, that makes sense.
They're if that's their niche, they're also now directly impacted. Their whole customer base has now basically stopped trading. Yep. So yes, they are then most likely going to have to go through a little bit of a longer process through that New South Wales grant, or get confirmation from an accountant. So, but yeah, the JobKeeper scheme is obviously the one we want to kind of get some of the detail out there, and just sort of flow through how it's going to impact people, and some of the dates, and just cool it a little bit. So, the first thing is you need to have been an eligible employer before the 1st of March, right? Which means so you need to have been employing people, ideally reporting through single touch payroll, which we're probably going to refer to as STP. I'm probably going to slip into that. That's the first thing, to be eligible for this. Quite simple. Now, that's quite simple on the surface, and we'll touch on some of the sole trader stuff a little bit later, what we do know. You need to obviously enrol with the ATO for this scheme. The date for that's the 20th. So we've still got a few days before that enrolment process is released and we can access it. Sole traders will access it through that as well. Okay. So they'll go through the same enrolment through the business portal, however it might be delivered at that point. You need to have at least one eligible person, right, an eligible employee for this, or a business participant if you're a sole trader, partnership, trust. And the information on that, this is where it's, again, a little bit confusing, but refining the reporting on who those eligible employees isn't all done through STP, like single touch payroll. There's also another monthly declaration we've got to make. Okay. That's made after the end of the month. 4th of May is the date they're saying that'll be available from. So the fourth thing you want to look at is the turnover test. So there's a lot of conjecture about the turnover test and how it applies. What we do know is the ATO documentation and the explanatory statement are saying that you need to pass this test once. Okay, not continually for the whole 6 months. So that's probably a bit of a revelation that we're still coming to terms with. Is we need to satisfy this test once. The test isn't aligned to your BAS period. Firstly, so that was a lot of the early documentation was suggesting it would be quarterly if you're quarterly, monthly if you're monthly. That doesn't appear to be the case. You can attest anywhere from March against March, April to April, right through, or the quarter of the quarter of June versus the quarter of June, April through June, but not the quarter of March. So for a lot of people, they were stressing that, well, March wasn't too bad.
Yeah.
How do I fall in? Part of this is going to be about estimating where things are going to land by the end of April. So you're going to have to take some look at what you've got and work out, okay, what's in the pipeline, how much services am I going to deliver before the end of the month, what's my turnover going to look like, what did I turn over this time last year in that month. So again, for businesses that have really solid accounting software, that's going to be a lot easier to do than someone who's got a less sophisticated accounting software or doesn't have that detail to hand. They might have to work a bit harder to get the information. So that's probably number 4 on the list. The fifth thing you were going to do is there's going to be a notification to your employees that you need to get out there. So in writing, you need to let them know you're going to enter the scheme.
Yep.
They then in turn also need to let you know. So the next step is they need to let you know that you're their employer that they're relying on for this payment. They can only have one.
Yes.
And they can come back to you and say, this is, yes, you're my employer. So there's a specific form for that they've now released. So you need to have them sign it, return it to you. And then the 7th thing is we're going to have to make the payments before the end of the month. So the way this scheme works is you're going to get reimbursed, right, for it, for the wages, but you're going to have paid them first. So by the end of April, we're going to have made those payments rather than in line with the fortnights as you would normal fortnightly pay. So they've given us a grace period to get everything in line.
Okay.
And by the end of this month, you need to have at least paid everyone who's eligible under the scheme, if you're choosing to enter it, $1,500 a fortnight.
Just one cycle?
2 cycles. So before the end of April, we're going to have paid 2 cycles. Right. So, like you were saying, for businesses that have actually stopped trading, it means they're going to have to find this money to fund it. So that's been a bit of a sticking point, I think, for a lot of businesses, is for them to enter the scheme, to elect to enter the scheme, and they have 20 employees, they're going to have to find that money for 2 fortnights worth before they get then reimbursed by the ATO in May. So that is a bit of a challenge for it, and it's something that employers are going to have to work through. So that's the 7th thing. Look, we're going to have to pay them. That's how this is going to work. We're going to have made those payments by the end of the month. The other thing we're going to have to do is prepare the payroll accordingly. So there's some. We're still waiting on the software companies really to get up to speed on what they're doing. So the best thing to do is, if you can, is hold off making those payments or hold off reporting those payments until your software company that you're using for your accounting software is up to speed, right? So once that happens, it'll be a lot easier. That's going to take a bit of the pressure off how it works and how it happens. Once we've done that, we get to the end of this month, 4th of May, we're going to have to, I believe it's going to be called the JobKeeper Declaration Report, and you're going to have to do that every month. Part of that reporting is going to be turnover, and the other part is going to be eligible employees. So it's allowing for the instance that someone chooses that an employee chooses to leave your employment sometime in the 6 months, right? They get a job.
Yep.
And they say, look, hey, I'm leaving. This is the mechanism to allow us to notify the ATO and say, hey, Joe Bloggs is no longer one of our eligible employees. They've moved on.
Yep.
So that's what that's for. Interestingly, you're going to have to report turnover.
But they're not suggesting that they might take the payments away if you turn over.
But they've been, currently it explicitly says you pass it once, you won't be retested.
Okay.
So, again, this is some of the anomalies where you sort of look at and you start to get a little bit sceptical. But again, we can kind of just lean on the fact that it is implicit in saying that at this stage it's passing the test once. So, and then lastly, you're just going to lodge your activity statements. That's also going to fall into the reporting of the scheme. This is, because it's going to be your GST turnover, which includes your GST-free sales. So, importantly for anyone who's registered but is GST-free, like this industry, that they're actually reporting those GST sales figures in their activity statement. So, if they are lodging one, so that's kind of it. Yeah.
All right. So I'm just going to ask you. I realise we're already 25 minutes gone, and we've We're
well,
yeah,
okay.
got a bit of content to
Yeah,
get
yeah,
through.
yeah,
But
yep.
I have a couple of quick questions, and actually some of our viewers have asked some questions as well, so we might pop in with those. All right, one question here from Jane. I employ New Zealand citizens. Are they included in the job seeker scheme?
It depends on their visa requirements.
Okay.
Again, so this is these are probably a really good example of where when you're testing those eligible employees, there's some age, there's some start dates, employment types, and there's some visa types. And again, rather than sort of go through all of those in detail, if you do have someone who's on a work visa who you think is eligible based on the other criteria that's there, get hold of your accountant, get some clarity, and come up with a plan if they're not, or it falls into it if they are. So
okay. Good. Sarita would like more information about JobKeeper, which I think we've just provided a fair bit of info there. But Sarita, you and I are well connected, so please be in touch if you'd like some more info. I'll connect you with Barrett. Debbie would like to know if you're a sole trader. We're going to talk about sole traders shortly.
Yes.
So perhaps, Debbie, I'll come back to that question if I feel like we haven't covered it. Income test, some questions here about income testing.
Yep.
We talked about this, Barrett, when we're preparing. So a business that's scaled, so they've grown in size, their income is higher than 12 months ago, but they've still lost revenue.
Yeah. So where that kind of fits at the moment is ultimately they've come out and said this year, last year, right? Now some businesses won't have a last year, and some businesses last year won't be anything like this year. So where we sit with that is the legislation, the rules have left that in the ATO's court to come up with a alternate test. And as of this morning, it's still pending.
Yeah.
So we're going to have more information about the alternate test. I believe there's going to be some way through this online registration for us to demonstrate eligibility based on an alternate method. Mm-hmm. We're still waiting. So for anyone whose business has changed so drastically that it's unrecognisable, again, it's a case of hold tight, communicate with your employees that you're going to do everything you can to work out whether you fit into this, and that you're just you're trying to digest the information as it comes through. So
for businesses that are in this situation, and I would think in our sector that's probably there'd be many because we're in a growth growth sort of market. And they've only got till the 30th of April to make 2 cycles of payments to employees. So that's a lot to cram into. What are we down to, about half a month? 15 days. So are we anticipating, think the ATO will be out with that alternate test?
Yes.
Very soon?
I'm going to say yes, right? I'm going to say the 20th of April is kind of the sort of kick-off date for enrolment, and I believe they would be working really hard to make sure they've got clarity by the 20th. What people need to also remember is, yes, it would be devastating to not be able to enter the scheme in April, but there's nothing stopping you if you do see that turnover fall between now and the end of September to join the scheme at a later date.
Yes.
Right. Okay. So there is that. So yes, ideally, we're going to get that information. We're going to be able to digest it. Not so much petition, but certainly lodge our application online and fall into the scheme, and it'll be business as usual. So I've got sort of a few tips here for businesses. Today, what do they need to do? So as of right now, we're at the 15th of April. The first fortnight's essentially ended. We've got another fortnight that's due before the end of this month. What do you do today to give yourself just that little bit of peace with everything that's going on? So what I'd say to anyone is, if they haven't registered for the information to get the links and the text messages, not that I can guarantee there'll be any more that come out via that text service, but you can still register. So you can register at that, there's like at ato.gov.au/JobKeeper payment place that'll take you to. You just register, it puts you on the list of when they've got new information, they'll circulate it. We can only genuinely enrol on the 20th of April, right, which is in 5 days' time. So there's nothing you can do about that for now. If you don't have a single touch payroll accounting system, I'd probably look to invest in one. That's the other thing I'd really consider between now and the 20th and now and the end of April, is get yourself up to speed. the third thing is start establishing who your eligible employees are. So things like if they are foreign residents, confirm their visa status. If they're, date of birth, most payroll systems are going to have that start date.
Yeah.
They're going to have their date of birth.
Yeah.
So get all that information collated, work out who we're talking about here, look at what do they get paid now, what will they be paid now. I mean, I've got a template that'll help people do it, which we can obviously circulate or get in touch or work out how we can distribute that. But,
sure.
Put your employees in, put what you expect to pay them, put the critical information in, and it'll calculate some of the damage in terms of what you're going to have to fund before you get it.
Yep.
Or, if most of your employees are paid more than $1,500 a fortnight, it's really what you're going to get.
Sure.
So it's not so much a pass-through or like a payment that you're funding. The fourth one is notify your employees that you've nominated to enter the scheme, but you're waiting on eligibility criteria to be cleared up or satisfied.
Mm-hmm.
That again is just communicating to those guys. Have them sign those nomination forms in the meantime, so that you've got them. And then probably the fifth one is, really lean on your advisor, your accountant at this point in time. Things are changing really rapidly. It's one of those scenarios where, being able to DIY this is probably going to be a little bit beyond some people. And I think the sooner you sort of realise, yep, this is something I can do or this is something I can't do, get in touch with your accountant, start working with them, start relying on the information they're circulating. Mm-hmm. Most firms are working really, really hard to communicate to their clients what they need. This is where we're at. This is what's changed overnight. Sending out. So, if you're not getting those updates from your accountant, give them a call, send them an email, say, hey, have I dropped off a mailing list, whatever it might be. But try and work through that with them. That's probably the best thing at the moment. So those are sort of 5 things to sort of do to cool your heels a little bit before the 20th. And then really from the 20th, we kind of go through another sort of buzz of activity around this. So, that's probably the main thing.
It's going to be very busy.
Yeah, exactly. So for us, same thing. The moment it's the 20th, we're going to be working with our clients and trying to get that, get everything cleared up, get everyone who falls into it going. So
yeah, sure. We'll come back to, we've got some more questions waiting there. We'll come back to those shortly.
Yeah.
I wonder if we could touch on our sole traders, because we know in our sector we have such a high number of sole traders.
Yeah.
What can they access and what are some of the challenges in there for sole traders?
Yeah, so I mean, what we do know about sole traders is they're going to be eligible for this scheme, whether you're a sole trader, one partner in a partnership, one individual in a trust who's not getting a wage is going to fall into it in terms of eligibility. There's some other nuanced eligibility with this around having an ABN, being in business, having reported income to the ATO sometime prior to the 12th of March. Now, for people who haven't been registered for GST, haven't lodged a BAS prior to the 12th of March, and if they've started this year, they haven't lodged a tax return for last year with business income. So they are probably one of the groups that we can confidently say we're trying to get more clarity on.
Okay.
The ATO guidelines, I think, as of this morning, still say, under the heading sole traders, we're going to get back to you, basically. So they're just fine-tuning that. So again, it's a case of don't panic. If you're a sole trader, you have genuinely been in business, you've genuinely been providing services. So in this instance, particularly through the NDIA, we not only have confirmation you've been providing a service, but we've also got a third-party confirmation you've been providing services. You've been in business, right, prior to the 12th. So I think we'll still find the commissioner discretion, worst case, as a way of getting approval that, look, yes, you do. So unfortunately, it's that let's just wait and see. But you're going to know if you've had 30% drop in income. If you're one of those people, come the 20th, we're going to have a clearer picture. We're going to go through the enrolment. We're going to get into the scheme. So that's what I'll be saying is look at it positively. Yes, we're waiting on more information. Yes, if you've been drastically impacted, I think it'll try and get everyone there who's genuinely meant to be there. So that's probably the thing to really think about is the purpose of it. And I believe there'll be some more information coming. So that's number one. The other one that's coming up for sole traders is again, because it's a GST-free supply under the NDIS, a lot of them aren't registered for GST. So all the wording has been your GST turnover, GST turnover has to have fallen by 30%. So what we do know is that GST turnover, by definition, it does include GST-free supplies, and it will say, but excludes input taxed. Now, what we do under the NDIA in terms of providing services is not input tax. It's GST-free. So it will be the turnover that we're looking at is your GST-free supply, which would be your ordinary taxing, invoicing through to the plan managers, ultimately through to the NDIA. So.
Yeah, perfect. That will answer a lot of questions.
Yeah. So.
I know we spoke about this before, and I think I know what your answer is going to be here, but around the accessing super for sole traders, we're just sort of suggesting people get some advice on that.
Oh, 100%. So, super falls into really the financial advice, right? So if you are looking at taking money out of super now, you really need to talk to someone who's qualified, a financial advisor, who can walk you through, I guess, the pros and cons of doing that. So, it's really not something you'd want to touch on in a general fashion. It is something that you would want to seek specific advice from your financial advisor before you go ahead and do it. So.
Okay, and of course there's the job seeker payment is the other option.
Yeah, look, and then the job seeker payment again, which is the other option. So, which as an accountant, we're sort of dragged into obviously all of this at the moment with the business side of things, but I know personally I'm not as au fait with Centrelink's rules as other accountants maybe, but certainly for mine is if you think you're entitled for the job seeker, it's going through the appropriate channels to register for the job seeker because that'll be your ultimate answer. Asking your accountant whether you qualify is probably not going to be as meaningful as actually just applying for it and working out whether that's something you can get.
And of course, an employee or a sole trader can only apply for one or the other. Yeah,
and I mean JobKeeper is more money, right? So it's $400 more a fortnight. So it's obviously the one you want to be going for, I think, and we just need to wait just until the end of this month before we're probably going to be 100% clear on where we sit and what the reporting protocols look like.
Yeah,
so
sure. We're getting a few questions here, so I might touch on these first, and then we might move on to some other things. So we have a question here from actually Part B of an income, and I know a few people are wondering about this. There's delayed payments. So we know in the NDIS this is an ongoing issue with their fees and claims often take, not the portal claims, I know they go in quite quickly, but some payments through plan management or through self-managing clients can take over a month to come in. So in terms of showing turnover, that's a little bit tricky when those debts are sitting there outstanding. So is that something people should work through with their accountant? Yeah,
look, I think so. I think you're going to have to look back. Ultimately, they've said, look, this turnover test doesn't rely on your registration with your BAS, whether you're quarterly or monthly. I'm not clear, to be honest, whether if you're on cash or accrual, that impacts it either. So on a cash activity statement, for example, when you get paid, so when they finally do pay you, that's when you recognise it on your BAS, right, under a cash basis. Under an accruals basis, the day you raise that invoice would be the day you recognise that income. So not clear. Again, another one we're not 100% clear on whether cash or accruals is going to impact you. If you're on an accruals basis, the delayed payments are relevant. If you're on a cash basis, unclear whether it's going to be relevant or not.
Okay.
Yeah.
So that's another watch this space, that one.
That is definitely, and it's the same with the upfront payment too, right? So the upfront payment, which you may as well get into now. So the upfront payment really is, they've worked it out saying, look, it's 10% of what we think your average claims are made through the NDIS.
This is the one offered through the NDIS.
Yeah. So
the fees in advance.
Correct.
1 month payment.
So a lot of people have got that. Some people got it early April. Some people got it in March, and there's some concern about how that impacts turnover, right? Because you're like, well, I've just got 10% of what I normally bill. Bang. So no is the answer. It won't impact your turnover test, right? That amount really represents a prepayment of services, and I think you're only going to ever recognise that income when you raise the invoice and submit. So they've said that they're going to claw this back through the invoicing you do. When they start doing that, I'm not sure. And I don't think they're sure. I think they're waiting to see sort of when we start now. You put in a claim for $10,000. You know, we just think we're going to offset 50% of that against what we've paid you previously, or 100% of that. I'm not quite sure how they're going to work that out.
Or they won't wait for the COVID
to fully pass
restrictions to be lifted. Yeah.
Yeah. So, but it's a payment in advance, and it is a debt, right? If you've received that money, you owe it back to the NDIA until such a time you've invoiced or they've applied it to invoices. So it's not income.
Okay.
That's the main thing to think of in that is this is actually a debt. It's not an income. It's not an income line item.
Sure.
Your income is going to be what you invoice. So for people on a cash basis, like we're saying, if they submit an invoice and then it offsets against the NDIA payment, immediately they've received it essentially. So it might shorten that timing on that. But yeah, for a lot of businesses, like you're saying, who have a long delay, it's actually really helpful to have that money up front.
Yeah.
So it's really a prepayment of services to provide, and it's there to keep the services going. That's the logic, I guess.
And if people aren't sure how to account for that, they can talk to their accountant.
Yeah, they can talk to their accountant or their bookkeeper. You know,
yeah.
like some bookkeepers are just terrific, and they're going to be able to help you set it up, or if they're going to know how to set it up and claw it back as it goes. So
yeah, beautiful.
Yep.
Excellent. All right, we have a few more questions up here. Aqua asks, what if she's a company but she's the only full-timer in the company, and then she's got some staff that she hires through a contract?
Yeah, so again, they're probably quite specific. So for a company, if she's the only employee, full-time employee, and been paying a wage, I imagine it's not going to be a problem if she passes a turnover test, other eligibility, timing. That shouldn't be too much of a hassle, even if she's the director, right? So that's not too much of a problem because she's getting a wage.
Sure.
When it comes to contractors through this, they're ultimately, if they're relying on their own ABN or they're relying on their labour hire company, again, pretty nuanced, and individual circumstances are probably going to apply to that you need to specifically seek out advice to it. So there's probably not a lot of general rule, unless they contract to you, they're their own sole trader, they're applying for their own JobKeeper, only one person can get it. You can only get it for your employees. So other than that, there's not a lot you can probably... Yeah,
so the contractors would probably be sole traders in their
own... Well, they probably would be in their own name or their own company or whatever it might be. So then they're doing it themselves, So again, it's really subjective to the arrangement. So
I'll just nail that down because I know I've had some questions about that. Absolutely, JobKeeper is only for employees, not for contractors. There's a lot of contracting in this sector.
Yes. So for you, yes, it is. As the person engaging the contractor, as the business engaging a subcontractor, you can't get a JobKeeper payment for that person, right?
Okay.
Unless there's something that I've overlooked, but there's no sort of mention of sort of quasi-employee relationships and that type of thing.
But they can apply for JobKeeper.
But they would then apply for it if they've been, if they've actually seen a 30% drop as well. Then they would look at JobKeeper, JobSeeker, depending on what's most appropriate for them. So.
Yeah. Okay. So. So I apologise, friends. I am reading the questions. Now, Aqua's actually said she doesn't pay herself a wage, so that might complicate things.
Well, yeah. Look, it potentially will, and again, it's very much a get on it really early,
and get on it today, Aqua. Yeah.
Well, yeah. Look, and same thing. Enroll. If she doesn't pay herself a wage, there's still a business participant director element, much like the sole trader qualification.
Okay.
So, yes,
there might be a way.
Yes. What we know is she would still be able to one person. So, if it was husband and wife team, only one person as a director, business participant is the word I'm using, would be eligible for JobKeeper. So there's still an avenue there even without paying a wage. It'll just be through that alternate route. Yes. So it'd still be hold tight to the 20th, enrol, submit all the information that we've got, and one director should be fine to get business participants. What I believe, yeah.
Okay, awesome. All right. So Ted asks, small business owners. I think we've answered this, Ted. Small business owners, if they ask, will they qualify for JobKeeper, if they got to go to JobSeeker?
Yeah, look, I think we've
we've
answered
covered that
yeah.
earlier on. Yeah, about who, and again, it's the 20th of April. Just apply and.
Yes. If you've suffered the losses, you meet the general. Yep.
Okay. Richie asks, how about if you have staff and they're still doing hours but not as much? Can they claim JobKeeper can they be topped up? Now this is a regular question.
Yeah, absolutely. So that's the design of the scheme, right? It's to for anyone who's earning less than the $750 a week, $1,500 a fortnight. You as an employer, you get the $1,500, albeit in arrears, right? Your requirement is to pay everyone at least a minimum of $1,500. So if you've cut their hours back and they do 2 days a week for you, you top them up to $1,500. Now, the little bit, but so you will get $1,500 still, even if you're topping up, by $250 a fortnight. You then get the $1,500. So for everyone who's keeping employees going and have still suffered these 30% downturn, that's what they're trying to incentivise you to do, is to keep people employed. So for businesses that are still usefully using their employees, they're getting the benefit. For businesses that are closed, they're almost acting like a decentralised Centrelink. They're collecting money, passing it through. Really not a lot of benefit and a lot of administration burden if you're not operating and you're not employing. People aren't gainfully being employed. They're not actively being used. But
that
certainly
benefit that they're holding on to their employees.
If you pay an employee $2,000 a fortnight usually, and they're still gainfully employed in that way, and they're still working in the same fashion and still being useful, and you haven't reduced their hours, and you qualify for the scheme, you would keep the $1,500. So your cost to keeping that person's now subsidised. So it's really a wage subsidy scheme designed to subsidise employers, and then it's also designed to really sort of maybe take some of the stress out of the public system a little bit, but with the idea that that person is then going to be fully available when we go back to a level of normality, or when things ramp back up or business ramps up, is they're employed by you. You essentially can call them into work to work for you. There's no rehiring. There's no issues with trying to find people. So that's the idea. So yeah.
Okay. Well, Barrett, we're at the end of our time already. We said that this might happen.
Yeah.
So much contact. Thank you so much for that amazing amount of valuable content that you've given our sector today. We obviously have much more to give. If your business is operating in New South Wales and you'd like to access some business advisory support that's completely subsidised at the moment by the New South Wales Government under the Business Connect program, I would suggest that you Google Business Connect and follow the links to book an advisor. We will post the link in the description underneath the recording of this, or you can always contact us here at the Business Centre in Newcastle, and again we'll post some links. If your business is operating outside of New South Wales, we can help you as well. Unfortunately, you can't tap into that government subsidy, but we certainly are very happy to work with any business that's experiencing difficulty. We have a range of episodes in this series, and we'd encourage you to check out our YouTube channel to view those, which have all focused on this current disruption. Massive thank you to Jono and the amazing team at Fordtronic who set up the audio visual and have run this whole webinar today for us live, and have been our AV partners over all of this whole series. So they're amazing, and thank you. So thanks for joining us. We hope we see you sometime soon in the flesh when we're allowed to.